Welcome to Tip TV Finance, where I'm joined by Alessio Rastani, who's from leadingtrader.com. How's your day, Alessio?
Yeah, thanks for having me again. I appreciate it. And I've got something really interesting to talk about with you, especially for people who like social media. But look, bottom line is, look, I'm nearly 40 years old. You're just under 40. About the same age, right?
No, I'm just over 50, actually, unfortunately.
The fact is, though, one of the problems with the new generation, not millennials, I think it's called the me generation, where apparently you have to post everything you do on Facebook or Twitter or Snapchat every minute. And according to the MarketWatch, I recommend everyone to read this article in MarketWatch, which says that the people who post the most on Facebook and Twitter are the loneliest people on the planet. But here, let's take a look at some interesting facts about Snapchat. So here's the thing. Last week, we were talking about Snapchat, and I said that, you know what, pay attention to this, because what people often ignore are the exact fundamentals, the financial structure, how much money they're making. You know, Zach, I'm sure you'll agree with me on this. Before you buy a stock, you want to know exactly, is this company making money, right? So take a look at Snapchat. Revenue of 2016 was 404 million. These are in thousands. So 404 million. 2015 was 58 million. Look at this, costs and expenses of that much, and net loss. This is how much revenue, or sorry, net loss or profit it made. 2016 made a loss of 514 million. Here's the thing. I'm sure there's a lot of people thinking, oh, okay, so when do we buy Snapchat? Is it even worth buying? Well, first of all, the fundamentals show this company is not making money. You know, Zach, I wouldn't even touch this with your money. And I wouldn't even touch it with my mother's money. I have difficulty
touching it with my money. but isn't the issue here that people are not interested in the past or what the company's doing at the moment even. They're interested in the future. And they think that this is going to be the next Facebook, this is going to be the next Amazon, this is going to be the next Google. So can you guide us on that?
It's possible. Anything is possible. But then again, we thought pigs would fly. You know. But look at this. Take a look at this chart. History tells us that whenever a web stock IPO, like again, Facebook, LinkedIn, Groupon, Amazon, all these companies, every single IPO web stock, with the exception of Google, whenever they've gone on the stock market, within the first 5 months, Zach, they've had, you can see, from anything from 50 to 30% drop, and I'll show you the median, the mean average. But Zynga fell to 49% of its initial highs in 6 months, and Twitter, as you famously remember, Zach, fell to 60% of its initial highs in 7 months. So my personal suggestion to people who are thinking of buying Snapchat is, look, wait, let the dust settle, and they will settle in 5 to 6 months, and you'll probably get a much better picture. And I'll show you the chart of, this is Facebook when it launched. I mean, I actually warned my subscribers, and I warned a lot of my friends, look, stay away from Facebook at the start, because look, it fell from 45. Its initial highs were 45, and it dropped to 22. One pattern which seems to repeat itself, by the way, this is very interesting, which is that what tends to happen when a web stock IPO gets launched, it usually falls 50% of its highs. And what I would recommend is put a 21 weekly average on your chart, which is that blue line. And when the price closes twice above the weekly average, that 21 weekly average, that actually is a much better time to consider buying the stock than just jumping in at the beginning. That's a bit of technical analysis.
Yeah, that's a good...
yeah, I guess so. Next chart. Did you want to say something about that, Zach?
No, no. I did actually call the shares higher from $26 in I think it was 2012. So,
that's right. That's right.
So that was I got lucky with that.
Oh, you actually went long on 26.
Well, no, I actually wrote a book about. I was predicting, you know, the 2013, and one of the predictions was Facebook. But I mean, I think that even then there was that pattern of. Floated too high, coming back, but there's nothing wrong with the company. It's just the pricing.
That's right.
It's actually the initial pricing was
valuation was over.
How that works.
That's right.
That's what I'm trying to find out. Somebody says, oh yeah, well, you know, let's think of a number and then double it and put it on the market at that price.
That's right. And I remember, actually, I'm glad you brought this up, because a well-known fact is when Facebook got launched, behind the scenes, Goldman Sachs were selling their own holdings in Facebook. That was so extraordinary. It was wonderful. Twitter. Yeah, Twitter fell from 74, which was its highs in 2013. I think 2013, 14. I don't remember. And it fell down to 37, and now it's 15. LinkedIn Yeah, so again, famously fell from 122 to 50%, almost 50%, $61. eBay. Again, eBay, not many people remember this, back in 2001, I think it was. Launched at just about $1 worth, fell to 45 cents, and then if you just waited a little bit...
there is a great pattern here. I mean, it's just the 50% rule.
Yeah.
Basically, just take the highest number and halve it.
I reckon it's a reliable rule, especially if the company's fundamentals are so bad as they are with Snapchat. Let's go look at the next one. So, Zach, I'll let you have your view on this in a few moments, but all I'm going to say is this. If this pattern follows, if this history repeats itself, which I think it will, then if this is the high, we don't know yet, if this is the actual high of Snapchat or Snap.
It's the high.
Okay, it's the high, okay. If $30 or 29.46 is the high, then I'm looking at a 50% level for potentially considering going long, 14.7. I actually am going to go further. I think that's going to might fall even further than 14.7. $10. I wouldn't even be surprised to see the single digits, but that's a little bit too far off. Zach, your point of view?
Well, no, I mean, with the history lesson you've given us, I mean, for the 50% rule seems good. I would be concerned that, that for me, Twitter was a better company than Snapchat, not just because Trump uses it.
True.
And if that can't revive, then this looks more like a Zynga.
That's right.
Or something. This doesn't look very pretty. But the valuation metric is there in terms of $200 a user or $100 a user. There is a valuation metric there, so it's not just about the losses. And Amazon, you could say that was in the same. That could have been an even bigger loss company than.
That's right. Initially, yeah.
So that's turned out right, but we shall see. Alessio Rastani from leadingtrader.com. Thank you very much for coming in today.
Hi, this is Alessio Rastani, and thank you very much for watching this video. If you like this video and you'd like to see more videos like this, then please remember to subscribe to our channel and like our page. And you can also visit me on my website, leadingtrader.com. Thank you very much.